Hello, everyone. Welcome to another edition of Tip Tuesday. Geoffrey Nance here with you. And today's topic is one that would be pertinent to the month that we are currently in. That would be December. There is this theory out there that in December the market goes up. Why is that? Well, everybody's happy. It's Christmas time, right? So everybody's in a giving mood and everybody's in a buying mood, and they're out there buying gifts for their family and they're buying gifts for everybody else, and they're out there doing stuff. And again, everybody's doing more family stuff and they're spending money all over the place. And of course, the market is going to respond accordingly, and it just is going to go up every December. And this is what is called the Santa Claus effect. Well, like any theory that exists, if you were going to try to understand that, really, you have to go back and look at it from a very scientific point of view. Well, we can't study science from a historical perspective. What I mean by that? Well, what they do when they try to prove whether or not something is true is they have to have these settings, and they try to maintain the settings in such a way that there are variables which they control and some that they try to stay steady. And so they can really tell whether or not one thing is truly impacting something else or not. And then they create this hypothesis and they figure out whether or not this thing is actually true or not. So when we have this theory of the Santa Claus effect, I think it's important. Obviously, we can kind of Google that and look it up. I mean, assuming Google's working today. I know there have been some issues with several different things out there kind of going haywire today for some reason. But we go look that up. Well, for me, I look at this and say, well, okay, from a historical perspective, what does that tell us? And thankfully, we have a very great tool that we can use called a chart. So we can kind of go back and see, all right, well, what does the market do in December? So rather than just taking something at face value, just go out there and say, all right, what does the historical data really reveal? And so what we're going to do today is we're just going to look back over the last 5 years and see if this is actually true. Does the market go up in December all the time? So that's the first question. Does the market always go up in December? And if that's the case, should I just go buy some stuff? And then at the very minimal, just hold it, understanding that for the most part, it's going to go up. So that's the first question that we're going to look at today. See whether or not over the last 5 years that has been true. And then number two, if indeed it is correct or mostly correct, what does that look like? And then how much of a move up has the S&P 500 historically made, at least over the last 5 years, which obviously those are the most pertinent to what we're dealing with. Doesn't make a lot of sense to go back into 1990 or anything like that, because obviously that was a very different time, which seems crazy to me that was over 30 years ago. That's wild. All right, so let's just look at the last 5 years and kind of see what the market did from 2016, 17, 18, 19, and 20. And then overall, is there a general consensus that we can make over the last 5 years? And can we draw any reasonable conclusions as to what that looks like, and then how we, as traders at various levels, ought to approach trading in the month of December? So I'm going to share my screen, and then we're going to bring up this historical data. And so what I did is I basically just took screenshots of the market from December from 2016 onward. And we're going to go look at that data just so you guys can see exactly what's happened and what the market did look like in each of these years. So you guys should be seeing this on my screen now. I'm going to see if I can kind of make this where everybody can see it. I think that should be good, just so we have an idea of what we're looking at here. I think I might even be able to zoom in a little bit more. Hopefully this just makes it a little bit bigger on your screen, because mainly what we want to see is right here. So on the right-hand side, you kind of get an idea where was the S&P. So around the 2,200 area. So in 2016, I'm going to look at two things. So the first question we're going to answer is, did the market move up? Well, all right. So this is December 1st. That's the last day of December. Did the market move up? Well, 2,200 basically, and it closed at 2,240. So did it move up? Yes. 40 points. Is that a big deal? No. So let's go back and look at these individual candlesticks. Now I'm going to assume that most of you guys have been with us so that you understand each of these candlesticks represents the opening and close of a particular day when set to a daily view, which is what we are looking at here. So we're looking at 1 month of data. Each candlestick represents 1 day's worth of data. So obviously one big move right here on that day, but outside of that, mainly small body candlesticks, one big down day, another big down day. So we basically had 2 noticeable days when the S&P actually dropped. I would even say maybe 3. So 3 days where it dropped, one big day where it went up, and overall, once it made that initial move up, we kind of got a lot of floating. And then for the rest of the month, it pretty much went flat. So there wasn't a lot of movement. Let's just go see if we can see anything with volume down here. The white line will kind of tell us average volume over the last 30 days. We can see that average volume was pretty much the same. And then certainly there the last 2 weeks, it tailed off and we were certainly below average. So did it go up? Yes. Did it have a lot of big moves? No. Certainly it did not have a lot of big moves. We had one big move. Other than that, we went relatively flat. It's kind of up. And then we actually had 3 days. When we listed what are our 4 biggest days, 3 of them actually would have been down. But it did end up for the month about 40 points or so in 2016. Okay, cool. What about 2017? All right. Well, we started at 2250. We closed at 22, essentially 80, 30 points. So the S&P was up about 30 points. But when you're talking about 2000 and we're up 30, 2000, what's 10% of that? 200. Well, I mean, we're talking about basically what is that, a 30-point move? We were up less than 1% for the entire month. About 23 would have been about 1%, and we were up basically 28. So pretty much 1% for the entire month. Did we see any major movement? No, not really. I guess we would say maybe one noticeable candlestick here. Other than that, no real big indicators down, no real sizable moves up. From a volume perspective, what did 2017 look like? Below average, right at average most of the time. And then surprisingly, in the last several weeks of the month, it actually picked up. So kind of strange to see that. So once the volume did pick up, let's see which way it actually was going. Down. Interesting. So when the volume picked up after Christmas, it was actually going down. So no big candlesticks, but the increase in volume certainly came as there was more selling to end off that month. And for the entire month, we ended up less than or right at 1%, 2017. So not much of a Santa Claus rally in 2017 either. So not much in 2016, not much in 2017. What about 2018? All right. Well, we opened at about 2650 and we closed at 2675. 25 points. 25 points. All right. So again, less than 1%. So now it's 2016, 2017, 2018. This Santa Claus rally, as some might refer to it, we've had less than a 1% move now for 3 years in a row in December. Now, it does look like there was a lot more activity in 2018. A big candlestick there, a big wick there. There was a lot of movement there the first day of December. Next day it was down big. We see a big candlestick here. Oh, there's a good size one up. But most of the moves up are just kind of small body, nice, kind of floating. Hey, neutral, happy market. And then we get some bigger ones down. And then certainly to end the year, we had probably our biggest one. Maybe that one's the biggest one. Down. What about the volume, 2018? Yeah, again, really low volume to end the year, below average for most of that month. Okay, so 2016, 17, 18. What about 2019? Oh, wow. That that is certainly not a rally. If anything, it was the exact opposite. So we started at 2,800. We hit a low of 2,300. The S&P dropped 500 points. 500 points. And essentially, we entered into a bear market in December of 2019. Oh, interesting. Very, very interesting. Okay. So again, COVID, yes, that certainly impacted things. Lots of changes going around during that September, October, November, December, out into even January and February. We were aware of that, but wow. Okay, that one's interesting. All right. 2019. Oh, wait, we hadn't even got to COVID yet, had we? All right. So, no, I'm off there because that comes in the later that year, but really into 2020 is when we see that. January, February of 2020 is when that happens. So we're kind of, that's an interesting time there. All right. So obviously a big drop. I mean, 2,800, 2,300. Of course, we closed at 2,500. So a little bit of rally there at the end. We see a massive candlestick there towards the end of December. It looks like right after Christmas to kind of even get us back here to where we only ended up down 300. So obviously, big candlesticks down. A lot of big candlesticks down. Right here, recovery at the end. What did the volume look like? Above average, a few days down below it, but a very interesting 2019 for sure. Very, very different than the previous 3 years. All right. So what about last year, 2020? What does that look like? Well, we opened at 3,100, closed at 3,230. So this is our biggest move. Now, by this time, the S&P is up about 1,000 points from where we spent 16, 17, and 18. We were in the 2000s there. So percentage-wise, what do we get? We got about a 100-point move. 300 would be about 10%. And we got, let's see, about 100. So we got about a 3% move in 2020. So this is our biggest move over the last 5 years from an upward perspective. Again, most start the December, we had a big candlestick down, but we had a good candlestick up for the most part. Then we just floated. A lot of small body candlesticks just kind of floating its way up, and then closing on a positive note. So yes, last year we did have a bit of a rally in December of 2020. Now, what is going to happen in 2021? That's a great question. Right? That is a great question. And the answer is we'll just have to see. Historically, or at least over the last 5 years, what we have seen is that there's not a very discernible, certainly if we were looking at this from a scientific perspective, we would say there's no discernible move up in December. Now, notice the S&P recently, 4,500 is basically where we're going to start this December. So if we were to carry this out and see what happens, based off of a really 2 big moves just in the past 2 days that have really brought this up, because otherwise we would have been about the same, around 4,500 right where we started. Now, the last 2 days have propped this up. They're expecting some Fed intervention here that has propped this up and given us this run that we've been seeing over the past couple of days. We're basically seeing almost a 200-point move up in just 2 days. So obviously that's a pretty big deal. Percentage-wise, 4,500 to 47, about 200 points. Overall, it's not a big move. Again, 10% would be about 450. We're looking at half that. So up about 5%. That's a pretty big move, pretty strong move, but 2% of that was today. So we'll see what happens over the next few days and where things go. But as far as a discernible Santa Claus rally, historically, at least using data over the past 5 years, we haven't seen that specifically. What we have seen is that we tend to see smaller body candlesticks. Well, notice that this December is already very different. Every single day of December has been a big candlestick so far. I don't expect that to hold up. That would be really surprising. I don't think that we're going to see that as we end this December. Where is the S&P going to end? That's a great question. We'll have to see what transpires over the next 3 weeks that we have left of December. But as a whole, I think this has been a good exercise for us to see something we always need to remember. Just because I hear something or see something on the internet doesn't mean that I need to take it at just simply face value and assume that that thing is always going to be the case, because what we've seen here recently is that that has not been the case over the past 5 years, that we have not seen a significant rally. If anything, we've seen very small moves up, lower volume in general, and smaller body candlesticks. Has it gone up primarily? Yes. The 1 year that we saw a big drop, that was obvious it was a big drop. Other than that, we've seen kind of a nice little steady, slight 1% kind of move up for the most part. Well, that's your tip for today, guys. Hope that you enjoyed that walk down the history of the S&P through the month of December as you kind of embark on what the next 3 weeks might look like for you guys. Want to make that available to you and just kind of show you what it looks like, and then give you some thoughts on maybe how that would impact your trading. Thanks again for being with us. We'll see you guys next time.